Well, hello and welcome to the midweek trade right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. I will find out what's next for telco consumers as tariff hikes take effect. And KCB Group, that's Kenya's largest bank by assets, has become the second major lender to reduce its lending rates. Plus, global markets brace for U.S. consumer price index data. And it's great to have you join us. I'm Ladi Williams. Let's get a check on how your money's performing with major asset classes. Now, we'll see oil prices slipped today, snapping a three-day rally as rising U.S. crude inventories and hawkish comments from Federal Reserve Chair Jerome Powell weighed on market sentiment. And we're seeing Brent crude futures there down about 67 cents, about 0.87%, from the earlier rally we had earlier, over 1% jump. And we've been seeing that 1% jump, for the trades this week. But we're seeing a pullback there for Brent and WTI. Well, let's get a check on what's playing out with the metals market now. See, gold prices also slipped after rising to an all-time high in the previous session, as also on the back of comments from the Fed Chair, Jerome Powell. We see palladium, that's down $978, 0.3% down, unchanged for spot silver, platinum. I've noticed a trend with spot silver. It doesn't really follow what's playing out with other metals that we track. Then for U.S. gold futures, still around the all-time high, $2,922 per ounce, was down 0.4%, moving away from that $3,000 psychological level most investors are waiting for. Spot gold, 0.1%, down $2,895. So that's the picture right there in the metals market. All right, let's bring it home now. Leading Tier 1 bank FbnHoldings PLC has announced a change in its brand name to First Holdco PLC. At the 12th annual general meeting of the holding company held in November 2024, shareholders approved a change in the legal and brand names of the company from FbnHoldings to First Holdco PLC. According to the financial institution, the transformation and rebranding marked a significant milestone in the company's journey to redefine its identity, unify its subsidiaries, reinforce its heritage, and strengthen its position as a leader in the financial services industry. And now we see Nigerian subscribers are reacting to the sharp increase in one of the leading networks' data and SMS tariffs. We also see the House of Reps calling for a halt in the telecom tariff hike. Let's unpack all of this now with Oluwole Abegunde, as a research director at Insights. Hello, Oluwole, great to have you.
Yeah, thank you for having me, Ladi. Good afternoon.
Yeah, so everything's playing out right now. The telcos, they've gone ahead to raise the tariffs. That's with MTN Nigeria leading the charge there. But we're seeing some pushback, at this time. Is this what you saw coming?
Absolutely. I saw this coming a long time ago. The market could not sustain without the tariff increase because we could see it was inevitable for like a year or two when the biggest players were declaring losses upon losses year on year. But the market needed the tariff to be raised to give the telcos a cushion to adjust to a couple of the challenges they've been having with inflation, diesel prices, FX prices, and the rest. So it was a long time coming, and it's about time.
Right, and some consumers would disagree, and definitely it's understandable that we're seeing prices of every other thing go up, and some wouldn't like to see the price of tariffs actually rising at this time. We see everybody's on their social media at this time. You see people scrolling, and I'm wondering how this will impact all of that consumer demand that we're used to when it comes to data, for instance. So what are you seeing will be the next play from most of the consumers?
I believe most of the consumers will just increase spend on mobile data, mobile voice. Because now, since COVID, there's been that change in how we use data services for sports betting, for mobile banking, internet banking, for streaming services, and all sorts. So there is that huge demand for the need for data service for subscribers and enterprises also. So I believe what will happen is there will be that shift in change from voice services to mobile services. We've seen that happen all through COVID, and this will only expedite that because rather than spending on voice, I spend on mobile data that can guarantee me to also do voice on WhatsApp, Facebook, and other social media platforms. So that's what I see. There will be that. I think in the last 1, 2, 3 years, there's been that migration from voice to data. I think it will only be more accelerated now that we have prices going higher.
So that means you're expecting when most of these companies report their results, we might see voice revenue drop.
Yes, I expect that to happen because, again, like I said, since COVID, there's been that, if you've seen 20%, 30%, 40% year-on-year growth in need for data services COVID. I think with this price increase, that will only accelerate more because people will now depend on data services more to do voice. It's a lot more cheaper to do. If I want to call you before, Ladi, maybe on the mobile service, I would rather call you on WhatsApp now because I wanted to save on my credit, I want to save on price and things like that.
Right, definitely. I'm sure we'll see some interesting consumer behavior, with all of this. But is it possible that this could, spark some kind of price war with the telecom operators, or do we see a collusion at this point?
Price wars are never beneficial, except for the consumers, of course. It's a race to the bottom. So I don't expect a price. What I expect from the telcos is innovation. The problems that we have in Nigeria are well documented and affecting the telcos, your power, inflation, FX. What I expect from the telcos is to innovate how they can maximize the opportunities that have been created by these challenges. In-house IT, IT development, and I think the federal government can also help too, because one of the things is why are they buying spectrum in dollars? Why services are in local currency naira? So if they can meet with the government and have a sit down and negotiate that would also help them. The recent 5G licenses that were given out was about $20 million. That's about 30 billion naira. Now, only maybe MTN and Airtel make such in profit. So when they want to now renew the license, it will be a lot if it's in FX. So that is one thing the government can do for them to ensure that they can also buy licensing in local currency since they are offering services in local currency. But I don't expect a price war like you asked. I expect innovation from all of them to find a way to reduce their cost and maximize revenue.
All right, definitely. We'll keep tracking this developing story at this point. We'll continue seeing reactions, as we go on. But thank you so much. That was Oluwole Begunde, the research director at Insights. Thank you for coming on today.
Yeah, thank you for having me. Thank you.
All right, so it's still a season of outlooks. The Nigerian real estate company Bemoan is the latest to give a forecast for Nigeria's real estate industry for 2025. The Bemoan Real Estate 2025 Outlook participants harped on the potential Nigeria's real estate sector in spurring economic recovery and the importance of policies targeted at developing the built environment. Take a listen.
In Lagos, the bustling economic hub of Nigeria, the highly anticipated Bemoan Real Estate 2025 Outlook event took center stage. The event gathered influential stakeholders, industry experts, and key policymakers to discuss the future of Nigeria's real estate market with a special focus on growth, innovation, and sustainability.
We see real estate as a major catalyst for economic development. Because at the end of the day, one of the three variables in the Maslow's theory of hierarchy of human needs is shelter. It's actually food, shelter, and clothing. Now, what are the key drivers of real estate development? You won't be surprised that number one on the list will be infrastructure. Number two on the list, if you want to ask me, is still infrastructure. And And if you still want a number 3, I will still tell you that number 3 is still infrastructure. Now, if anybody is in doubt, I will remind you to look at the Lekki-Epe Express Road.
Among the key figures at the event was the former Minister of Works, Mr. Babatunde Fashola, who delivered an insightful keynote address.
Housing deficit, in my view and by my experience, is an urban problem. It's not a rural problem. Because history and experience by the planners, urban planners and developers will tell you that at no time in human experience has there been such a rapid rate of urbanization. And what is urbanization bringing? It is bringing people who are living properties, houses in the rural areas and in the villages and coming to scramble for space in the urban center. It's a demand and supply thing.
Also on the front burner was the issue of upfront payment for rental properties.
And it has really been a fantastic one. So the event they're having today, which is the 3rd one, clearly shows that people are getting aware. I remember when they started this, there was only 150 people at Baker. The next one was probably last year, which was done at Muzon. They have about probably 500 people. But today, it's over almost 2,000 people are here. The hall is filled up. So people are now being aware of the importance of housing, real estate, and the responsibilities. But if you listen to the keynote speaker, he said something that how can someone be paying 3 years rent in advance? It doesn't make any economic sense. They're going to put pressure that they should try to introduce. I mean, they are doing 1 year rent now in advance. They should try to introduce monthly rent, which is done all over the world.
With a focus on innovation, sustainability, and strategic policy, the Wemabod Real Estate 2025 Outlook event concluded on a high note, leaving stakeholders excited for the future of Nigeria's real estate sector.
As we look ahead to 2025, several factors are poised to influence global financial markets, with particular attention being paid to emerging economies and key commodities. While leading investment company Commercial Partners recently released its 2025 economic outlook for Nigeria and the global economy. To help us unpack the report, we have joined us Mr. Steve Shaw, is a Managing Director, Commercial Partners Asset Management. It's great to have you on the show. Happy New Year.
Good afternoon, ladies. It's my pleasure to be here this afternoon. How are you doing?
I'm doing great. So, definitely we're all trying to figure out, from the crystal balls, what to expect, in this year. Investors are trying to find out, where to pile cash in, where the opportunities are. But, speak to me about the key global economic factors, expected to influence, capital flows and asset performance, in 2025, according to your report.
Okay, thank you, Ladi. I think, sorry, I'm struggling to hear you a bit, but I'll try as much as possible to project the question that you asked me now as to the best of my ability based on what I heard. I think for us, if you look at the global market space or global economic growth in 2025, from our projections, I think the global economic projections is still a bit subdued, or remain under a bit of pressure, which is reflecting just what we have seen in the previous year coming from the post-pandemic and even pre-pandemic period. If you look at the number or the projection from World Bank, IMF, and Fitch in terms of the growth for 2025, I think you will agree with me that projections already shows some level of limitation in terms of what we expect to see in 2025. From World Bank, there is a projection of about 2.7% growth compared to 2.6% that was recorded in 2024. And from IMF, slightly higher than what World Bank is projecting, around 3.2% as against what we got in 2024. 2024 too was actually very flat. Then we look at Fitch. Fitch was a bit cautious in their growth projection, looking at 2.5 projection in 2025 as against 2.7 that we recorded in 2024. If you put all that together, considering all the pressure that most of the economies have been facing and the restrictive plan from the central bank of this world. You've seen how Fed has been trying to react to interest rate, and now they've been very cautious in looking at the statistics and thinking that it's time for them to actually, look at the numbers and look at the statistics before they actually can accommodate any dovish stance going forward. We've seen some slight drop from Bank of England and some from ECB as well. But again, I think the caution or the message for 2025 in terms of growth pattern has been seen across all the emerging markets and even developed world. It's going to be a cautious environment going into 2025.
Right, and talking about the U.S. Fed, we did hear from Fed Chair Jerome Powell. He did say cuts do not have to be fast. He's expecting slower cuts in 2025. When you look at the relationship between Donald Trump and the U.S. Fed Chair, are you seeing a strained relationship going into 2025?
Sorry, Ladi, I didn't hear that. I'm sorry. The line is a bit faint. Okay,
I'm saying, are you seeing a strained relationship between President Donald Trump and the U.S. Fed Chair?
Of course. That has shown from even the rhetorics we've been getting from Donald Trump before he actually became president. Even though it was the same guy that appointed the current Fed chair, but you've seen that from his own rhetorics, it looks for more of a dovish stance, or it tends towards more of a dovish stance compared to what the Fed chair is actually saying. But we can see that most of the time, and in most advanced economy and decent economy, you agree with me that there's a level of independence between the presidency and the Federal Reserve. So, and I think that's going to play out going forward. And we've seen the Federal Reserve Chair saying that they will dwell so much on statistics and the numbers. So they are having some, positive numbers coming from the job numbers, but at the same time, they're still having some challenges when it comes to the economic growth. And it's because we've seen a lot of outcome of all the stimulus that have been released into the system post-pandemic, and that has affected the economy globally. And the inflationary threat is still a pressure that the Fed Reserve is actually looking at. And with that in sight, you will see there's a bit of conflict in between what the President Trump is looking at and what Fed chairman is actually looking at. But at the same time, they are concerned about the growth. They are concerned about, they want the economy to actually reflate and keep growing, but they are concerned about what the implication will be if they drop the rate aggressively. And that stance will continue, in my view, for the rest of 2025.
Well, I guess it's going to be a very interesting year, for the U.S. At this point. But let's bring it home now. How is Nigeria's, macroeconomic trajectory expected to, evolve in 2025, in terms of inflation and exchange rate stability?
For the local space, I think we've seen some level of adjustment. Even though not on inflation, we've seen that inflation is still a bit sticky and still high at above 34%, slightly above 34%. In terms of the interest rates still remain elevated. And you can see that from all the borrowing from government papers and even all the corporate issues that happen in the market. I think generally the growth for this year is still hinged around 5% based on projection. For us, we see three different scenarios in terms of our projections for inflation. From our report, we actually put as the base case scenario, the bull case scenario, and the bear case. The bear case is saying that we see inflation trends lower, 20% to 25%, and we're saying the bull case will probably be around 10 to 15%, and base case will be between 15 to 20%. And the result of that is based on the fact that we have done a lot of analysis on the statistics based on the rebasing of the data, inflation numbers and the GDP number going into 2025. We've seen an adjustment of that from what we used to see in between 2009 and 2024. And if you look at the high base effect that we'll see or we've witnessed in 2024, and interpolating that into what's going to happen going to 2025 and beyond, we think there's going to be some level of moderation between now and half year, actually. That's by June 2025. How rapid this will happen now depends on some other factors that we will like to see. And if you look at the number of other factors like exchange rate control from CBN, we've seen quite a lot of volatility, but we've seen that volatility has reduced as we begin to see a lot of inflows coming from offshore investors, FPIs, and we've seen some of the backlog of FX hangover that the CBN has been repaid, and with that we've seen slight appreciation of the currency at the highs of 1,008 to a dollar to about 1,005 now on the NAFEX market. So that and the future effect of that, even though we believe there's going to be some lag in that, but that future effect of that will actually translate into moderations of inflation number, and we'll see business actually grow along all other sectors in the country or in the economy. We believe that there's going to be some level of achievement in terms of the GDP forecast in terms of growth for 2025.
Right, and I know you deal with investors a lot, and I'm wondering, the investors you deal with, are they nervous, about 2025 when it comes to their portfolios?
Ladi, I'm sorry, this network is a bit dodgy.
Yeah, okay. I'm asking if investors that you deal with, are they optimistic or nervous, about their portfolios in 2025?
Well, it depends on who you're talking to. You have some investors who are risk averse. You have investors who are looking at taking advantage of opportunity and looking at where we're coming from. I think this is the first time we're seeing interest rates at this high level at this point. There is a bit of opportunity in the interest rates play. There's a bit of opportunity in the equity play. And if you're trading in the international market, there's a lot of investment going to AI investment as well. So I think it depends on who you're talking to. So there's some investors who are going to be very cautious. That still believe there's still a lot of overhang, especially with the regional conflict that's happening and all the implementations of some of the policies that's going to be coming from US during the administration of Trump. I think that put together will depend on who you're talking to. As for us, we advise our clients on different portfolio and on different streams of investment opportunities. So we are not just restricting them to one asset class. We look at portfolio by portfolio and we look at investment assets depending on what we think your risk appetite is. And we advise based on that. So in Nigeria, you're going to have those who are cautious and who are not ready to take much of aggressive risk and will just play out on something that is more of risk-free. But you have some other investors who are interested in actually playing out and taking advantage of the recent opportunity that the market will present.
I'm talking about, playing safe. We've seen gold, hit new highs. Are your investors demanding gold at this time?
Sorry, I didn't get that.
Are your investors demanding gold? We've seen a rally, monster rally, with gold is nearing that $3,000 level. Are your investors asking for gold?
Are they asking for gold investments? Yes. Is that what you're saying?
Yes.
Okay, yeah. I think because of the volatility we've seen on equities to some extent, global equities and even local equities, we've seen some interest actually move to gold and commodities generally. So, and if you look at how the gold value has actually moved between pre-pandemic period and now, you wouldn't blame anybody for looking for alternative assets to actually put their investment. So we've seen that happen. Although the elevated yield on the government instruments and even across the global space have actually necessitated a lot of people to take advantage of that because you don't see that all the time. So maybe that slows down a bit of investment or interest in gold opportunity. But overall, I think we're going to see some investment or interest going to commodities trading and mostly gold.
All right, we'll definitely keep watching out. Thank you so much. Sorry you couldn't hear me so well. That was Steve Moshow, Managing Director, Commercial Partners Asset Management. Thank you.
Thank you.
All right, let's head straight to the markets now. We have Ini John McQuarrie, and she's right there at Custom Street. Hello, Ini.
Hey, Ladi, I see you've been having fun right there in the studio. I don't know if to call it a Trump fun because Trump is giving direction to every conversation that we're having these days,
right.
Ladi.
Yeah, it's all about Trump at this point. Everyone, investors just listening close to what he has to say next. And definitely we see the markets reacting.
Yes, but I don't think NGX is catching that cold, at least not yet. I don't know if it will get there, but let's look at the markets. Everyone, as promised, I'm back here for the markets at intraday, still from the studio at the NGX, and we look at trading day at this time. We see the NGX has crossed over to 106,000. In fact, it's at 106,750.63, and that's up 0.17% at intraday. That's good news. Let's find out the drivers of this and other information with Dr. Ayode Jebo right here, the Managing Director of Optimus by AfriInvest. Dr. Jebo, good afternoon, and welcome to the studio.
It's great to be here.
Yeah, so we did see 2 days ago, the market was kind of cold, not moving so much. Yesterday, intraday, we saw that. But now it seems things are moving. What's happening?
No, I think that is the bellwether stocks. So you look at the likes of Dangote Cement that most remained stagnant for months before the active trading started like 2 weeks ago. So investors are already seeing that the current level is attractive, and we're seeing a lot of interest in that. You also see MTN, for instance, and these stocks form a major part of the
MTN
market.
has to do with the tariff, or
yes.
is it?
Yeah, yes, is the.
But there's a threat from the lawmakers to suspend the tariff hike.
Yeah, but I think that it's really very clear if we want to be objective that in the last 10 years we have not increased prices. The exchange rate has moved, price of diesel has moved. So I think the engagement will go on, and I don't see anything that should stop that, because it's really justified if they really want them to be in business.
Yeah, because the telco said this is for survival, for sustainability, not even for profitability.
And when you look at they are systemically important to the economy. Everything as we're here, we're also
exactly
data.
Connecting to the studio and everything.
They can't afford that that industry shut down.
All right, so we see Dangote Cement, but what's bringing up Dangote Cement? Any news around Dangote Cement?
No, I think that if we follow this, if we look back, there was a time that the stock moved to close to about 700 naira, and over time it declined. So it's getting to a level where investors are comfortable to come in, because if you also look at it fundamentally, you look at their 9-month results, it's also very strong. So we think that investors are now, that have been waiting, anticipating it for months, are now beginning to just purchase the stocks. And in terms of dividend yield, even the last dividend was over 100% payout. It means that Dangote Cement paid out of reserves. So they also have very fantastic dividend payout history.
So it paints a picture that even as we speak, there are some investors who just sit down and look at the stocks and see, okay, when this price, I know there are even softwares or so that allow you.
Technical analysis.
Yeah, when this price comes down to this, just buy. When it gets to this, just
and those
sell.
are like limit orders that for some, those are short-term investors. But typically, we always encourage, because the market is good for long term, so you always have that long term horizon if you are coming to the market, if you are not an expert.
So apart from these two you've mentioned, which since they are surging, I don't know if it's a good time to buy, what else could investors be looking into around the markets? Okay,
first thing I always say, one of the principles is that when you see a stock moving, so I'd say don't join a fast-moving train if you are not able to join it before it kicks off. So now investors need to play a bit of caution and see maybe there will be a bit of pullback and consolidation before it begins to move. We saw that even with MTN around 250 before now moving again. So when you also look at the agri sector, when you look at likes of Okomu, Presco looks, based on valuation, cheaper compared to Okomu. And looking at what they do, oil palm is like the next oil. The demand is very strong. When you see consolidation, you take advantage of that, and you also plan to be able to invest for the long term. So we think that when you look at that sector, the banking sector, I would say that the listing of the shares is also what a bit of investors needs to be cautioned about. That's the offer shares. But and also looking at the expectation that interest rates will also come down. So for long-term investors, they should not be very aggressive going into the banking sector space at this level. And then you also want to look at the oil and gas space.
Eternal Oil has been moving. I thought it would be MRS, with the connection with Dangote and all.
Yeah, so I think that there's speculation around MRS maybe leaving the exchange, and there are still a lot of speculations around that. So maybe investors are a bit very cautious around that. But you look at the likes of Aradel. Yes, based on when they release their result, very impressive. That also moved and is consolidating. So for investors that are long term, is when you see stocks that are maybe consolidating around a certain level and they have strong fundamentals. That's always the best time to also come in gradually into some of those stocks. You see the likes of Seplat is on full offer. It means it's a seller's market. Most people are not buying. Yes, it has remained at that level for weeks now. So there's a need. That's why for professional advice, when you're also coming to the market, I tell people that when we have headache, you consult the doctors. But Nigeria, most times you want to always solve the problem yourself. So there's a need to understand timing is really very critical when you come into this market, and fundamentals is also, so that you don't lose your hard-earned money.
So apart from the stock market now, MPC is meeting next week. What are the sentiments around that, maybe from the fixed income markets and other levels of investments?
Okay, so on the back of the primary market auction, T-bills, we saw a lot of activities. Yields came down because you had the auction. Yields also came down given the demand of about 3 trillion naira on the 364-day instruments. But what we see that MPC will be focused more on now is they are expecting the inflation, the rebased inflation rate would also guide their direction, and I think that's what may be responsible for the shifts that we saw, rescheduling of the meeting that we saw. But for the fixed income, I would say investors, the expectation is that this high interest rate cannot be kept at this level for long. So you go long. When we say go long, invest in longer dated instruments. With CPs, go for the 270 days. If it's treasury bills, go for the long tenor. So you lock in. There's what we call reinvestment risk, so which is the risk that if your investment matures, if interest rate has dropped, it means you're investing at a lower rate. So when you look at your overall return would have dropped. So these are some of the strategies that we try to engage our investors.
Dr. Ebo, do you see the MPC holding? I don't want to say reducing.
I think they would hold, except we see a dramatic
number from the NBS. But the expectation is that our inflation will be lower when it's rebased.
I know it will be lower. When I say dramatic, we don't know how low it will be. Yeah.
Anyway, we have the projection. It's 25% inflation for this year. So
yes, that's based on the budget numbers. Yeah.
Okay, we'll see where that goes. But apart from the fixed income, the equities, any other area at this time that you think investors could look to?
No, I think that real estate, which based on also the rebase, will be the third largest.
Overtaking oil and gas.
GDP is also an area where investors need to look at, but you need to understand that space. You need to work with experience, and so it's you see like a new terrain, but there are a lot of opportunities. You make a return could be above inflation if you work with the right partners within that space, and you also get to invest within the right location.
And I think it's also very important that potential investors are very careful, because any area that gets attention, it's good and bad. So you hear a lot of stories, around.
Yeah, that's why the advice is to work with professionals that they're already within that terrain. So if you have to pay 1%, 2% for lawyers that are within that space to help
to cover your investment,
yes,
so
do
you
your search,
totally.
You do your search properly. Also working with the right developers. You also, the off-plan opportunities also gives a lot of upside potential upon completion if you do it rightly. So these are a mix of investments, then mutual funds. So for those that don't have the time to monitor shares, we're talking about different fixed income investment. You have the money market mutual fund, you have the equity mutual fund. These are funds that are managed by professional managers, portfolio managers. So you can invest in those funds, and because you also be assured that you know that there's someone looking after your investment, and you track your return over time.
All right, Dr. Ayodele, thank you so much
Always
for your time
pleasure.
and those investment tips. All right, just before Ladi will kick me off, let me give you numbers from the other market. From South Africa, we see it's positive at intraday 0.70% at 88,171.94. We've seen South Africa steadily going up since last week, now at 88,000. Now, Egypt is negative at 0.40%. For Nairobi, that's yesterday's close, negative also 0.38%. We move to the Middle East and we see a mixture of colors right there. Dubai is negative 0.80%, Abu Dhabi positive 0.12%, Saudi Arabia, the Tata war, negative also, as well as Qatar. In the United States, where they're moving a whole lot of markets, it's a negative trade for the features from the Dow Jones to the S&P to the Nasdaq, all fell at the features. And Asia markets closed at this time. The Nikkei of Japan, there are the rose mostly based on sentiment around the United States President tariff impact. So we see the Nikkei is positive, the Hang Seng is positive, Kospi of South Korea is also positive, Shanghai very positive 0.85%, and India is still going down. We hope they don't go back to that 22,000 level, but they seem to be on a negative trend at this time, and that's how the market is looking. The close of trade for Asia, intraday for the other markets, Ladi.
All right, thank you so much, Ini. They're giving us all that's playing out with most of the markets that we track and the global markets. Thank you so much. All right, let's get a check of what's playing out in Europe now. We see Germany's trade surplus with the U.S. has reached a record level according to latest official data, and that could make Europe's largest economy even more vulnerable to any potential U.S. tariffs. Join us with more. We have DW correspondent Chipoda Chibelu. Great to have you, Chip. So can you break down the latest, Germany-U.S. trade figures?
Well, Ladi, Germany's trade surplus with the United States grew to 70 billion euros last year, and that is around 10% higher than the previous record, which was set in 2023. Now, the latest figures are nothing to celebrate here in Germany, because it actually means that Europe's biggest economy could find itself potentially even more vulnerable to any U.S. tariffs. And the timing couldn't be worse. Last year, Germany was the only G7 economy that posted an economic contraction for 2 consecutive years. And its economy this year is projected to shrink to by 0.3%, according to the country's economy ministry. Now, with the United States being its biggest trading partner and as an export-dependent economy, Germany is, of course, especially vulnerable to any U.S. tariffs.
So what has been the effect of, Trump's latest tariff announcement?
Well, the news of the 25% tariffs on imported steel and aluminum in the United States won't be actually too painful for Germany's economy. It could only make a tiny dent. Now, one estimate says it could knock off about 0.03% off Germany's GDP, and that would amount to 1.22 billion euros in a year. That is because, of course, less than 10% of Germany's steel and aluminum go to the United States. States. Now, the European Union has said it will retaliate to President Trump's tariffs on steel and aluminum, but we will only get to see whether and how Brussels responds to those tariffs if they do take effect on March 12th. There's already been some reports that the EU has prepared a list of US products that it can slap with retaliatory tariffs, and we do know that this wouldn't be the first time that the European Union has done so. During President Trump's first term in 2018, the EU retaliated with its own tariffs on many US products. Now, today, EU trade ministers are actually holding a video call in which they will be discussing how to respond in case of a trade conflict. The US and the EU have the world's largest trade relationship, and it is worth around $1.5 trillion. At least that's what it was worth in 2023. So obviously, trade dispute would harm both economies, as many experts have already warned.
So I guess the tariff drama continues at this time, but how is that impacting the markets in Europe?
Well, actually, European stocks are continuing their rise to record levels. The Stocks Europe 600 is up 0.07% today. Now, while that might seem quite low, we need to also take into consideration that it is actually up 0.8% since the beginning of the year. European equities appear to be ignoring the threat of tariffs. And on Tuesday, Germany's blue chip index, the DAX, crossed 22,000 points for the first time. And today, it is also trading higher. It is up 0.27%. And in terms of the biggest movers, it is Dutch beer maker Heineken, which is soaring. It soared 11.6% after it reported better than expected profit. And it has also launched a share buyback program and forecast further growth in its operating profit this year. Now, today, investors will be on the lookout for U.S. consumer price data for January, because that will provide some clues on the U.S. Fed's monetary policy outlook. And Fed Chair Jerome Powell will be appearing before Congress for his second day of testimony.
All right, definitely a lot to look out for right there in Europe. Thank you so much, Chip, for the details.
Thanks, Laddie.
Obviously, Kenya's commercial bank, KCB, has announced a reduction of interest rates charged on loans. And KCB's announcement definitely, that came as a good news for most of the companies operating there. Commercial banks will put on notice for reducing the rates. That's from the Central Bank of Kenya. So remember, the banking sector is contended with various factors, including the cost of funds and credit risk assessments, and that's been influencing lending rates. So I guess right there in Africa, we're seeing the East African country there leading the rate cuts. All right, now, most businesses in Kenya are less optimistic about growth in the coming months, largely attributed to the high cost of living and an unfavorable regulatory environment, a move that might likely hurt job creation. Only about 65 business owners out of every 100 remain optimistic about growing their revenue in 2025, that's according to findings by the Kenya National Chamber of Commerce and Industry. All right, to another conversation now. As artificial intelligence, continues to revolutionize industries around the world, marketing, that is one sector experiencing a profound transformation. In Africa, the potential for AI to reshape the marketing landscape is immense, but questions remain about the readiness of the continent to embrace this shift. Well, join us to discuss this now. We have Laura Sagwe, she's a digital marketing specialist. Hello, Laura. Great to have you.
Thank you very much. I'm very happy to be here. This is actually a very interesting topic. Africa is actually at a pivotal moment in embracing AI marketing at the moment. While the continent may actually not be as advanced as other regions in terms of AI adoptions, there is actually a significant, progress and readiness in some key areas. We have countries like South Africa, Kenya, and even Nigeria here. We're actually leading the charge with growing tech ecosystem. However, we do have some challenges such as limited infrastructure, data accessibility, and skill gaps still exist. The readiness is actually there, but it requires more investment, collaborations, and policy support to fully assess AI potential in marketing.
All right, what would you say are the biggest advantages that AI brings to marketing in Africa?
Yeah, in terms of marketing in Africa, I would say it would really help, especially small startup digital marketers. When it comes to helping you creating content, you have an idea. Many people, they have business ideas, but they don't know how to bring this to life. So with AI, you can just have that, write the prompt, and you have like a draft. It makes things easier actually. And with many businesses now, AI is being integrated into it. You can see where you have like automated chatbots in terms of customer service. So this is actually a game changer, and it would definitely help marketers.
So how do you think artificial intelligence can help small and medium-sized businesses? How can they compete in the digital space?
Yeah, for small size and medium businesses, in terms of it's cost efficient. So just like as I mentioned initially, they would compete with bigger firms or bigger companies because they can have access to tools like automation tools, chatbots, and they are just like email marketing as well. So having access to these tools, which are quite cheaper, it would actually help them, put them in a position to be able to compete with other bigger firms.
All right, so, definitely we still need to talk about the infrastructure, data, and, talent. Do we have all of that, to fully leverage AI in marketing in Africa?
Yeah, in Africa, there's still, like I mentioned initially, infrastructure is actually a big challenge. That is actually the major challenge in Africa compared to the Western world, where you don't have access to maybe the internet or electricity and all that. And we don't also have lots of AI experts as well, people in data science or machine learning and all that. But if the infrastructure gap is addressed, I think there is hope, it's promising. But for now, there's a knowledge gap as well. And not having access to the right tools is actually like is a one step back. So if these issues are addressed, yeah, I think it's promising.
Right, and I keep seeing a couple of AI videos on social media right now. Some you see two people just start fighting out of nowhere, or we're seeing plays with
lagging. I can't hear you.
Okay, I'm saying I see interesting videos on social media about some of these AI videos. Some are getting quite annoying at this time. But in the next 5 years, where do you see AI-driven marketing in Africa?
Yeah, in the next 5 years, I see the rise of African AI startup. More AI solutions tailored to African markets. I see collaborations in terms of maybe like the government or more investors coming in terms of education, having like educational hubs or just having centers where people would have more access to learn about AI, and they can actually leverage this in their business. So in the next 5 years, AI is the future right now. So in the next 5 years, I see more awareness about it. But some people in some areas, they're not even aware of AI, and they are not aware they can actually use this, in their business or in their day-to-day activities or in their organization as well. So in the next 5 years, I see more awareness regarding that. I see more investment. I see more courses and collaboration with the likes of maybe Google or Microsoft and all that in Africa.
At AI Future. Thank you so much. It was great having you, Laura Osagwe, as a digital marketing specialist. Thank you so much.
Thank you. Thank you for having me.
All right, let's head to the crypto market now. We're seeing red on the screen there with most of the top cryptocurrencies that we track according to Coin360. 1.8% drop for Bitcoin. Started off the week like we're going to see maybe Bitcoin back above $100,000, but that switched quickly, I guess, on the back of comments from Fed Chair Jerome Powell. Let's look at the headlines in the market now. There's a crypto stealing malware out there, I think, on iOS and most of the platforms. The new report by Kaspersky reveals a new malware that's hiding in software development kits on both Android and iOS apps, targeting digital asset users and wiping out, their wallets. Definitely not easy, being your own bank when it comes to the crypto industry. We're also seeing XRP, XLM battle. That's heating up on social media. Everyone saw XRP and XLM. They were like, siblings at some point. But there's an online squabble there erupting over one of the founders' comments recently. So you can track all of that. But we see the prices, they always follow each other. That's XRP and XLM. All right, let's bring in Emmanuel Anyasi now as a crypto influencer. Hello, Emmanuel.
Hello, Larry. Good afternoon.
Good afternoon, Emmanuel. It's great to have you. So it seems we can't move forward without memes, at this point. And we've seen Central African Republic. They launched a meme coin. This is a country now. We've seen the president, launch a meme coin. The first lady in the U.S., they launched a meme coin. Now we're having countries, launching meme coins. Is this another rug coming?
Yeah, Trump actually has opened up for everybody to actually come and launch meme coin. So it wasn't actually, we saw Cuba. Cuba actually did their own meme coin, but they actually deleted the tweets very fast. So Central African Republic, they did their own. It went to like $877 million all-time high FDV. And currently it's around 35 million FDV. I didn't actually see it early. If I saw it early, I would have entered. But on the long term, it's not actually a good one because those countries, they don't actually push their token. They don't do marketing or they don't do like other meme coin does. Meme coins are done by people or by community. So that is why we have seen both Trump and even Cuba and Central Africa taking a very huge dump. And they actually just be dumping. People just be waiting for any pump to shut them.
And it seems that's mostly the story, when it comes to most of these meme coins. A lot of investors don't catch it early. And I'm wondering who really catches most of these meme coins early?
Hello, come again, please.
I'm saying, that's the story most of the time with, recently launched meme coins. Investors hardly catch them early enough. And, they get to, you hear it's up 10,000% or more, but not many people getting early.
Yeah, because they normally control the supply. Like all of them, they do control the supply. Trump coin, he had over 80-something% or 90%. So they control the supply so that people will not actually dump. People will not just make money that bought it early and make money early and just left the project. Sometimes they control the supply too, so that they can actually maximize more of the profit. So most of the meme coin that does like that goes up like that, they actually, the people, they have a team and they have people, maybe people who contributed liquidity that got in very early. So they control the floor, they control everything. Like Central African Republic, they are controlling over 80-something% of the meme coin too. So it's a way of them actually making money too in the whole thing. Like nobody is there to be, like they said, they are not promising anything. They are not promising anybody anything. So it's just what it is. They control the supply, they buy in early and they raise it, then they push it to the public to buy. And along the way they sell, they make profit. The people that got in early to make profit. That is how it goes.
Right, it seems like most people just end up, with the bad end of the stick when it comes to, navigating these meme coins. But quickly now, before I let you go, we're seeing Bitcoin, having a big pullback at this time. Where do you think investors should be setting longs for Bitcoin?
Yeah, I'm not actually expecting anybody to actually be going long. Like today is CPI. CPI actually moves market. So we may actually be seeing, everybody will actually be waiting for any pump to actually short Bitcoin, because if you check Bitcoin, you discover that the volume is actually getting weaker. Like people don't want to actually bid around this 100K and something K. They want to get a very good discount they can actually buy. I think the whole hype on Bitcoin just keep going high has actually died. From the chart, I saw a double top around 108. I actually noted that. I actually traded that. But Marcelo actually buying. It doesn't actually sustain the bullishness of the chart again. Everybody is just waiting for a good retracement down to around 70-something, $72,000 or maybe $76,000 to actually get in. So most buyers are actually waiting. I think most people on the market now are short because Bitcoin actually broke the trend line. He has done double top and he's just rotating. He's just trying to range. Any long people short, any pump people short, any pump people short. So we might actually see Bitcoin actually breaking a long well without actually retracing, like going down to maybe to around 76, 75 key market key.
Right.
Bitcoin.
All right. We'll keep watching to see how all of that plays out. But thank you so much, Emmanuel Anyasi. Always great having your perspective. Thank you.
Thank you, Ladi.
And there you have it. That's how most of the markets are looking for this midweek trade today. We'll definitely catch you again tomorrow, see how the markets are playing out. Thank you for watching. From me and the team right here at Channels HQ is bye for now.